It's Ron. He's a co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. It's great to be here.
All right. So you guys have had pretty positive data on these buy now, pay later stocks previously, and Affirm seems to be one of the leaders, as I mentioned, up nearly 160% since those April lows. I mean, it's a parabolic move, Landon. Do you guys still have that positive data on this?
Yeah, I mean, it was a parabolic move, but it was also kind of a tank to get there, right? I mean, if you go back, they were at 82. They dropped down to 30, and now they're back to 80. So it's been a wild ride for investors if you've been holding that whole time. And actually, if you look at that last quarter, what's interesting is, they had a pretty good report last quarter. The stock was, I think, right around 54 going into that report, and a good report caused it to sell off down to 46. Now, since then, it's come close to doubling, so it's just been running up as I guess people realize they're the leader. But yeah, I mean, the data on them is basically they're doing really well. They're executing fantastically. They're the current leader, and they're expanding their lead. So basically all positive. And when you look at the consumer mind share, like what people are talking about, where they're going when it comes to web visits, they're basically half, and the rest are kind of fighting for the rest. And what's interesting about this is, when you look at how much that's changing over time, they're actually the leader there as well. So they're expanding. I think they're at plus 23% on a year-over-year basis, whereas all the rest are lower than that, and some are even negative. So they're the leader. They're expanding their lead, and they're doing a really good job. And I think a lot of the reason that they're doing so well really comes down to trust and distribution. Those two things are key. So they've got these true 0% loans that have no hidden fees. They've got more merchants, more distribution. They've got deals with Apple, Amazon, Shopify, Costco, and now Stripe. So they're getting out there everywhere, and they're being really upfront and honest with their customers. It's you're going to pay a little bit more, but it's later, and we're not going to charge you any hidden fees. Here's how much it'll be. No surprises. And then when people make the decision, they're like, all right, I'm getting what I want. I want money now, and I'll pay a little bit more later. And so they're doing a great job on that trust factor, and then also on the execution side. Their loans are more shorter term. They do a great job of keeping an eye on their consumers, making sure their credit's staying strong, and they do a better job of just reducing all of the risk involved with this kind of activity. So they're executing better. They've got better trust, better consumer happiness according to our data, and better distribution. The key though is, where are they compared to investor expectations? Because as I talked about, that last quarter, they were expecting, I think, an 8-cent loss per share. They got a 1-cent gain per share, and the stock went from 54 to 46. It sold off. And since then it's recovered, and it's now trading near highs. But what are people really expecting? What's it going to take to beat? And so we have data that supports where it's at now. But taking a bullish stance on this earnings report is tough just because of how far the stock has run. Kevin, I'd love to hear what you think, though.
Landon, it looks like, from what I read, they're getting close to gap profitability, right? This company continues to do all the things, but they have big costs. They have costs for transactions. They have loan provision costs that are really expensive. That being said, e-commerce, buy now, pay later, never been more popular than it is right now in getting more. And throw in a kicker, lower interest rates in the future probably help them, Landon. But you're right, the stock has run almost 100% off the recent lows after their last earnings. And it's not all, you could have good earnings like they had last quarter. You could beat, doesn't always mean the stock's going up. There's the problem. But this company seems to be inching closer and closer to being a profitable company, Landon.
Agreed. And you know what's interesting about this earnings reaction? I mean, if you look at what they did last time, I mean, they were plus 36% on gross merchant volume. The revenue was up significantly, and the stock sold off. And that was just the initial reaction. If you look at that chart, it's just the initial reaction. After that, it's been climbing and climbing. So there's almost like two reactions, right? There's the very first initial reaction, and then what happens after that. And then what happened after that is people said, you know what, actually, this is the leader. They're expanding their lead. Things are going really well. let's buy more of this one. So they're coming close to that more recent high of 82. Obviously not near that far left peak years ago, but they're doing really well. I mean, every category that we've got, they're the leader. Happiness, mind share, growth, all three of those, they're the leader. And so, we're bullish on them long term. If maybe they beat again, which I think they're slated to have 30% increase on a year-over-year basis on that gross margin volume. If maybe they come in at 30 and they sell off again, what a great time to buy, because they've demonstrated, or the stock has demonstrated what happens in that scenario. But for us, we're almost able to put a bullish bet on this. We've got a score of plus 16, which 20 is the cutoff. If this stock was trading at 70 or 60, it'd be a very high score. But the fact that they've run so far makes it tough. And here's that chart where you can see exactly the fact that, that yes, they have half right now, but they're expanding. They're the largest one here. Klarna is the only one that's kind of growing as well. But Afterpay is getting crushed, and Affirm is just expanding their lead. So it's always interesting to see, like, who's number one, and are they gaining or are they losing ground? And they're continuing to gain ground. So if we, next quarter when we have them on, I can almost promise you they're going to be over that 50% mark, and they're going to be the number one leader by far. So bullish on them long term on this report, leaning bullish, just a little uncomfortable with where the price is at.
Yeah, it has rallied, but your data supports the rally that we've seen here. That last chart that you had, where they've got the lead, their web visits versus the stock price were above there. One thing that I wanted to ask you about, Landon, and you mentioned it, Afterpay is kind of going away, but Klarna, they're going to go public here. They're taking their Walmart business. I mean, competition coming into the space. Is there enough of that revenue growth and GMV that's supposed to continue to expand to support everybody in here, and all boats get lifted in that high tide?
I think so. I think that where the consumer's at right now, and in the economy, I think that people are looking for ways to stretch their dollars more, especially in a way that just makes sense. It's like, again, the 0% loans. I know what I'm paying. It's not really putting it on the credit card where it's going to rack up 20%, APY. It feels safer, I think, to some people, and it's starting to gain popularity and gain trust. I mean, this kind of program has been around for a long time, but it's really only started to gain popularity over the last 5 or 10 years. And so I think as more and more people start to do buy now, pay later, the overall pie grows, and I think that they can afford some competition coming in. It'll be interesting to see what Klarna does after going public, and see if they can maybe take a bigger bite out of Affirm. Right now, they're both growing and they're both large, but Affirm is the largest and they're growing the most. So we'll see. I think, though, to answer your question, yes, I do think there's room for both.
Yeah, buy now, pay later has been, as Kevin and I can attest, this is the layaway plan that we grew up with, Landon.
That's right.
It's just got more fees, I guess. Maybe that's it. All right, great stuff as always, Landon. Appreciate it.
Take care, guys. Thank you.
All right, that's Landon Swan, co-founder of LikeFolio, breaking down the positive data.